Now calling up for the next talk, we have with us Mr. Mohit Gulati, CIO, ITI Group. It was my bad, I said IGI Group, it's ITI Group. If you allow, I'll just read out your profile in brevity. Mr. Mohit Gulati serves as the Chief Investment Officer and Managing Partner at ITI Growth Opportunities Fund. He is an early stage venture capital firm, which is an early stage venture capital firm known for its founder first philosophy, operational expertise, and thesis driven investments. An engineer from Pune University with a PGDM from IIT Bombay, Mr. Gulati began his career at Kilusa Capital, a Tiger Club firm, where he gained expertise in long-short investing. Later, he worked at the institutional equities desk of Antique Finance. His venture capital journey took off at Olifants Capital, where he led first-round deals for several early-stage ventures, including notable names such as Ecom Express, acquired now by Delivery, Grab, acquired by RIL, 1MG, acquired by Tata, Vigro Tech, acquired by Shiprocket, and HumorMe. With over 14 years of active fund management experience, Mr. Gulati is a recognized voice in the industry, having appeared on TV show Horse Stable. Beyond investing, he is an avid photographer, a CMAS Level 3 certified scuba diver, and shares his expertise by teaching venture capital at NMIMS Mumbai and MISA Business Schools. Sir, it's an honor to have you with us. I request you to kindly deliberate on the subject. Sir, please.
Thank you. Should we just... Yeah, this is fine. Thank you, Rian. Good morning, everyone. Thank you for hosting me in Odisha. This is my first time, so it's been a fun journey. I spent my evening in Puri yesterday. Was fortunate enough to get the darshan done. My job is both easy and difficult to follow this up after Mr. Patra's speech. It's easy because whatever he said banks can do, venture capital, there's a whole subset of things that banks can't do, venture capital does that. So that's the easy part. The difficult part is I will end up stepping on his toes a little bit, make a few statements which will, sort of question the status quo of how banks are run. And that essentially is the genesis of what my talk is about. If you look at the Forbes top 500, you look at India's BSE 500, very few companies have actually built on the basis of purely bank loans. Banks play an important role in the 1 to 10 journey of a business, but 0 to 1, banks just don't have it in their DNA to help you as an entrepreneur. There's a whole chicken and egg situation that you're all in, right? To have a better CIBIL score, to have a better experience score, you need to avail credit cards, you need to avail debt. Only when you avail it and repay it will your scores get better. In the world of venture capital, what we do is essentially bet on the unknown. We bet on people, we bet on businesses, which could be future ready. And that is really the essence of what venture capital looks like. There's a lot of misinformation around our style of operations. There's a lot of misinformation around what is the relationship between a LP, GP. LP, for those of you who don't know, is a limited partner. A limited liability partner in a fund is basically an investor. So how you buy mutual fund, assets, in the same way you buy into a venture capital firm. At ITI Growth, I run the venture capital piece for the ITI Group. We have LPs who are both domestic as well as international. As a group, we manage about $2.5 billion in total. So that's how the structure for us is. I'm happy to sort of take you a little more deeper into the history of venture capital. There are, it's a long slide. I speak fast, so I will try and cover as much time as possible. My sense is I have, half an hour? Half an hour, 40 minutes? right? So in the interest of time, I know I don't want to keep it boring. I'll try and keep it playful. I do this quite often. I teach at a few B schools, so I'm normally used to a slightly younger audience, but this should be fun. So we'll take you through a brief introduction on the journey of how venture capital began. One of the earliest VC firms in the world happened to be in 1946, which was the American Research and Development Corporation. And that basically became the founding figure of how venture capital is. A lot of the businesses that you know of today started their journeys with venture capital, not with bank loans, unfortunately. Whether it was Apple, Amazon, Microsoft, Google, eBay, Netflix, everything started with an idea. Everything started with no CIBIL scores. Everything started with not availing loans. It started with bold, ambitious investors taking a bet on people and saying, if you can build what you're saying, this could be something very interesting in the future. And that is really where the genesis block for venture capital is set. This is more from a global perspective. So I'm happy to sort of share this slide, for all of your consumption. But if you see that slide over there, you'll see a lot of names that you know that you use on a daily basis, whether it's Oracle, whether it's Netflix, whether it's Facebook, whether it is Airbnb, Instagram, whatever it is, right? The genesis block has a VC investor who took the first bet, and then yes, you had banks, you had everybody else coming in partnering to give them wings. But the 0 to 1 journey, the blue-blooded, one of the most difficult journeys where the mortality rates are highest, is taken by ambitious, bold-blooded bets, which could be angel investors or venture capital. So essentially, what is the role of a VC in a startup ecosystem? You're funding economic growth. You're building the bridges for that gap between availing bank financing, and you support businesses which have astronomical scaling growth potential on the back of technology, because technology is the only one sort of denominator which can give you a complete hockey stick J-curve growth. So as a VC, we are constantly looking for high risk, high reward investments. That is the nature of our beast. But at the same time, you're also looking at disruption. You're also looking at challenging status quo. That is the core essence, right? Today, unfortunately, in Odisha, I realized you all don't have quick commerce. But when you do get quick commerce, you'll realize you will never want to go to a regular retail store ever, right? Think about Zepto, Blinkit, Swiggy, Instamart, Flipkart Minutes. In cities today, sitting at home, we avail everything at our doorstep in 8 to 15 minutes. Is this something that you felt that you needed 5 years ago? Maybe not. But today, once you get it, it's like a drug, it's addictive, you just cannot let go. Because that convenience factor, the fact that you're able to save that time and the effort of going out and buying it, coming to your doorstep, giving you thereby more time to do something else which is a lot more creative for you. It could be reading, it could be spending time with your child, with your wife, whatever it may be. So that is essentially the kind of outsized bets that we would like to take in venture capital, even if it means to change people's thought processes and beliefs. In 2012, when I invested in Ecom Express, this was one of the largest express shipment companies in the country. India's total e-commerce market was $4.5 billion back then. And China, in a single day on 11/11, every year, 11th of November, they do something called the Singles Day Sale. That year, Singles Day Sale, China did $6.5 billion worth of e-commerce revenue only on one day. And we took a call that India has to catch up. I don't know which .com is going to do well, but logistics will be required for all the .coms. So I will bet on a horizontal which can cut across all the verticals. And that's the call I took when I was 24 years old. So you have to be a little more bold, you have to be a little more blue-blooded, and you have to dream into the future. My team, I tell them all the time that essentially what you're doing is not identifying businesses, but you're spending 1 hour a day dreaming into what will the future of India look like. What will the future of banking financial services look like? What will be the future of every Indian look like? I refuse to accept and believe that CIBIL is the way to judge somebody's credit worthiness, because there's a whole bottom 200 million stack of India which doesn't have a great CIBIL score. Trust me, their integrity and ethics are far higher than Nirav Modi and Vijay Mallya's are. So I think we have to think deeper. We have to challenge status quo. You cannot go by what has been given to you as a narration and say that this is how I will take it. We are rebels by nature. That is my industry. I come from an industry where we rebel. We don't challenge, we don't accept what is today, we accept on what will be tomorrow. Various types of venture capital funds that you will see corporate venture capital, you will see venture client profile, and you'll see venture builders, people who are building with venture capital. This is how the global private equity AUM market looks like. AUM is asset under management, right? Over the last 15 years, that number has grown at 14% CAGR. Around the world, people have woken up to this asset class, have lapped it up. And in my subsequent slides, I'm going to talk to you about what is the kind of quality of investors who have invested in venture capital, what kind of returns they've made. We'll talk from both startup perspective as well as investor perspective, and all the opportunities that you would have to avail either venture capital or be direct participants in venture capital transactions, right? I'm going to skip through some of the macro slides. I think we all know that this is India's decade. We spoke about Viksit Bharat 2047 yesterday. Whether we'll be a 30 or a 40 trillion economy, time will tell. But what we all know is that we are a young country. A large subset of our population is below the age of 30. So essentially starting up is not a fad. We have no option but to start up. Do you want to know some stats on this? India has 7.5 million young kids who graduate from colleges every year. 7.5 is about 75 lakh children who graduate from colleges every year. Public plus private job creation for the last 5 years has stagnated, and it's a number of 2.8 million, which is 28 lakhs. That's the new jobs that we're creating. 75 lakh children passing out, 28 lakh jobs available. Every time there's a government job application, you've seen the lines outside. For 500 seats, there'll be 50,000 people lining up. We have a job problem at hand. So the Honorable Prime Minister realized that what do we do to keep people meaningfully occupied? We give them impetus to dream. We give them impetus to start some businesses of their own. Not every business is going to be a unicorn. Not every business is going to be turning into a 1,000 crore valuation. But if everyone is meaningfully occupied, if it takes one entrepreneur who can hire 5 or 6 people around him, you have a lesser socio-economic problem where lesser number of people are unemployed. And the wave that you've seen in India over the last few years of starting up, and then the rest is law of averages, right? When 1.5 lakh new startups get made, you know from them you will be able to create 100 unicorns. That is what India has done. We have all racked our brains towards solving for problems across the board and been able to create some of the most interesting companies that this country has seen. 110 companies today in India are worth over $1 billion, and all of this has just been created in the last 10 to 12 years. You have employment of almost close to 2.5 million people directly and indirectly employed in the startup ecosystem. This is all new employment generated in the last 10 years. It is not legacy employment. You've seen what Trump has done to TCS and Infosys, which were the largest employment generators in the country. You will have these kind of risks coming in, which is why we have to think inward. We have to incentivize. We have to push our people to think from a bolder, ambitious future and to build more businesses from their own cities, from their own states. Not necessarily that you have to come to Bangalore or Hyderabad or Pune to build it out. We've seen some very incredible businesses being even built from tier 2, tier 3 cities. Simple businesses without really having to, do too much. In terms of, again, from the macros, I think all of you know well enough, everyone here is 5G connected thanks to Reliance and Airtel and a little bit of Vodafone. We are a large market. We are the only world's open market with 1 billion plus people, which is open to do business with the world. That is, of course, coming back to bite us because essentially every American company owns our tech stack today. So for all of you who need a WhatsApp alternative, you now know Zoho is building one for you, right? So there's a lot of things that you will do and see in India where you'll converge between how our consumption patterns are meeting. And that essentially leaves you with a lot of opportunity from an India stack perspective. As a young country, can you dream into the future of how India will consume or what India's problems would be? And can you build businesses which are relevant for that? And we will talk about it in subsequent slides with regards to what kind of relevant businesses got built in the last 10 odd years, what people thought versus what they actually became. One of the, I don't know if you guys know this, but one of the poster boys of the startup ecosystem is a person called Ritesh Agarwal, who runs Oyo, and he's from your state. So there are enough and more examples. I will tell you one more example from our portfolio, which is also from your state. Anyone over here owns a EV, electric vehicle, two-wheeler, four-wheeler, doesn't matter? Okay, less EV adoption. As in when you start owning an EV, you will come across a charging company called Bolt.earth. This is India's largest EV charging platform. The founder is from Orissa. He's from Bhubaneswar. In fact, I'm meeting him tonight for dinner. Phenomenal guy, bits pass out. We caught him at school level, saw the opportunity in what EV, again horizontal versus vertical. We said, okay, can we build India's largest charging infrastructure? So across 70,000 chargers, if you see the Bolt map in India on their app, you'll see all of India is now connected via their chargers. Simple business, we caught it at a $1.5 million valuation, and it's at 125 million right now. We made outsized returns on this transaction because we bet on a couple of things. One is India's EV curve, way ahead of time. 2019 is when we bet it. Nobody was talking about EV back then. We bet on the fact that, yes, this is a great team to execute it. And third, we bet on the fact that this is the horizontal that we want to be invested in. We want to electrify India. So that's the kind of investments that, that venture capital leads you to do. It makes you dream a little ambitiously. It makes you dream a little out of the box. It makes you question status quo. And that's how you stumble upon some of these investments. The first one, I have the light coming on my face, but I think the first one is a company called Grip Invest. You know, for all of you who are sick and tired of FDs and don't want to take the risk of mutual funds, and this I'm marketing for my own portfolio company, Grip Invest is India's largest OBBP platform, online bond trading platform, where you can buy bonds, including masala, not masala bonds, but well-defined baskets of bonds, where you will have a little bit of GSEC, a little bit of corporate bonds, at yields between 11 to 13%. Almost risk-free because your rating mechanism is pretty decent. So you're talking about BB plus, you're talking about AA minus kind of bonds. So there is this entire business model was not even existent. Retail participation in bond market in India. How many of you have bought a bond in your life? GSEC? What bond have you bought? You raised your hand. Okay, so you went well, so you're a little more astute in terms of understanding bonds. What about you? Okay, so portfolio manager advised you to buy a bond. India's retail participation in the bond market is an absurdly low 90,000 crores, that's it. Our equity participation is, you know, touching like close to what, 50, 60 lakh crores or probably more. I think just mutual fund itself is like 35, 40. Yeah, mutual fund is 77 lakhs. Yeah, so look at the disparity. Every mature market in the world, whether it's the US, whether it's China, has a very large bond market because the money market plays a very important role in plowing back capital for companies' working capital cycles. So that's the kind of opportunity that we saw. We said, okay, what is the problem? People are finding it difficult to access bond market. People don't understand it. Let's build a platform which people understand it. You've used Vint, so you know, I've done a video with Vint. So Vint is a very interesting platform, very similar to what Grip has done. The idea is to get more people to sort of invest in an asset class else than equity or else than traditional real estate. I think in yesterday's session it was well covered that real estate, while all of you love it, hasn't actually built as much wealth as what you would expect it to. So just giving you a little bit of flavor on how the digital landscape is moving. All these names are now household names. You're either consuming them directly or indirectly. Either your children in your family or your wife or your daughter, somebody or the other is consuming these platforms, or you're probably spending an absurd amount of time on Facebook or any of the social media platforms. So you've seen a lot of these businesses. This is the Unicorn Club of India. A lot of these names have actually become household names because is this for me or this for you? A lot of these names have now become household names because there is a product market fit that has been attained. And a 0 to 1 journey in them has been the starting point of where venture capital investments worked. Sir spoke about CCD being a preferred mechanism. We as VC funds use CCPS which is in a liquidation preference slightly better than CCD. But very rightly put, you told the audience about the CCD mechanism, but you didn't tell who are the ones who are giving the CCD or CCPS. So private investors, VC practitioners, angel investors are the ones who are actually giving out those CCPS transactions. And that is really how venture capital has sort of evolved in this country. We'll talk about some of the key participants. So I always start this slide with Indian family offices and how the investment thesis has worked. This is how the ultra net worth family offices in India have participated in venture capital. Everyone's, you don't need to take photos, I'll send it across, don't worry, public data. And now with ChatGPT being there, really nothing is private anymore. So the number of UHNIs that have got built and that have participated in this asset class has gone up almost 5 times in the last 10 years. When I started venture capital investing, the number of total accredited, non-accredited investors in the country was only about 350, 400 of us. Today, there are close to 25,000 investors of different clients. Sir said there is enough capital available. I absolutely attest to that. There is enough and more capital available as long as you have it in you to dream big, to build out something which is here to stay, which is going to be relevant to either the whole country or to at least your state. You have to build something at scale. Only then will you be able to attract foreign investors, external investors like VC funds. But that said, I would never discourage you from starting even a small entrepreneurial shop. Even if you're doing a chai ki dukaan outside, do it. But do it in a way where you're going to be creating a meaningful path to profitability / sustainability. And it is giving you happiness to build. This country needs more entrepreneurship. This country cannot ever create enough jobs for all of us. So you will have to find entrepreneurship either directly or indirectly, whether you're using bank financing or you're using venture capital or angel investing, that's all separate. But the fact of the matter is, just by nature of the numbers, you have to be an entrepreneur in this country if you have to really be even relevant in the future. Jobs will not take you there. Jobs are not getting created for you there, right? So just a little bit of a landscape around what kind of UHNIs are investing in this asset class. You have prominent business leaders, whether it is Azim Premji, Mariwala family, Ratan Tata, erstwhile Ratan Tata, R.K. Damani. You have a host of celebrities who have started investing. In fact, I manage the money for 3 of those names mentioned there. Large checks, you'll be surprised the kind of bold-blooded blue bets that celebrities are taking in startups directly. Do you know how much Katrina Kaif made in Nykaa when Nykaa got listed? Make a wild guess. 49 crores from an investment of less than 22 lakhs. It's better ROI than she's ever done on any movie of hers. I can promise you that. Right? Deepika Padukone, the Bachchan family office, Shah Rukh Khan's family office, everyone's been participating in this asset class. A simple 109 rupee MCA filing will show you their names on a host of cap tables, right? And then you of course have large NRIs who've pulled in that money back. Then you have digital entrepreneurs like Ritesh and Kunal Shah and all the others who have also put money back into the ecosystem. This is how the overall family office ecosystem looks like, where you have a host of large family offices which are sort of there. My sense is ITI also should be around somewhere. I'll give you a little more perspective around what we do at ITI a little later in this conversation. But are you all with me? Do you understand the asset class? Do you understand what's getting built? Any questions so far? Let's keep it interactive. If you have any questions, please feel free to shoot. No? Okay. I think I'm doing a phenomenal job in explaining, so I'm glad. These are the celebrities, like I said, a lot of participation that's happening in the asset class. And people are generally putting actual money on the table. Sachin Tendulkar has been investing quite actively. Of course, some of the names that you know are already there on multiple caps. And yeah, this is how early investors have benefited if they've been able to get onto some of these transactions. If you were an early investor at Flipkart, I'm not even saying like at seed level, but even if you were at Series A, Series B level, you have probably compounded your wealth to about 300 times what it was when you put money there. And Flipkart's still not listed. Once it gets listed, the value unlocking will be more. If you see a flutter of IPOs that have happened in the Indian markets over the last 1.5 to 2 years, they have been established startup companies, whether it is Zomato, whether it is Ola Electric, whether it is Swiggy. So many established startups have actually now got listed in India. So there is enough capital formation that's been done by this asset class end to end. Returns have actually come realized by investors. So yeah, that's like a overall perspective around how the space has worked. Sorry, I'm skimming through a few of these slides because if I take you through all of them, then this will turn into a 2-hour session. But I'm happy to share these slides. I think it's already there with this guy. And yeah, so you're seeing public markets also now accepting the way startups are built. You know, when Zomato listed itself, there was no path to profitability. It was a PAT negative company. And public markets found a way to punish it. The 100 rupee stock came down to 30 rupees because public market said, boss, you're not a sustainable company. And the founder realized that, okay, maybe with the Blinkit acquisition, maybe I will be able to build out something different. Zomato from its low has gone up 14 times. Not because of speculation, because its business models have actually improved significantly. It is actually building out free cash flow over the last few quarters. So that is the kind of learnings that you can get from the public markets also. It's essential that you're getting a full 360-degree view around what is being built versus being myopic and only talking about one single side. And because India's capital markets have actually opened up their arms to startup investing, either directly via these participations, you're seeing a lot more startups coming into India. It's like a flywheel that gets built out, right? We were talking about, you know, return on equity, right? Somebody was speaking about if you were invested in Nifty for X amount of years. So this is, I think my team's taken out a time period for, I think, so April 1st, 2014 to June 30th, 2023, right? 2023, we were pretty much in the peak of the then bull run. Your IRR on Nifty was about 11.22%. BSE IT was about 13.47%. Globally, of course, indexes, the FANG index, of course, did really well. But if you look at how Indian funds performed, particularly AIF, right? So in India, when we run a venture capital fund, it's under a SEBI-regulated mechanism called alternate investment funds, AIFs. There are 3 different types of AIFs. AIF category 1, where you can do angel investments. Minimum check size for an investor is lesser at 25 lakhs. In AIF category 2, you can do venture capital, private equity, debt. You can do a little bit of listed also, and you can do angel investing. It's one of the most flexible categories. Tax is a pass-through. And then there is category 3, where you do long-short funds. At ITI Group, we run a long-short fund, which is about 1,400 crores. And we run multiple AIF category 2 funds, which is under growth opportunities. That's about 450 crores for us as a practice. And then we run a mutual fund, which is about 11.5, 12,000 crores for us. So that's the overall landscape. Within our group, we like to sort of take pride in the fact that we've been able to build capabilities to play the entire journey of a company, right from the first check, say at seed level, to taking it IPO or public. We have all the right skill sets to build it out. We also have our own NBFCs, so we run about 5,000 crores in various different formats of lending. For anyone of you in Odisha, if you've seen ITI Gold, you know, that's our gold financing business. So that gives you like a overall perspective around 4 asset classes, which is direct investing into whether it is equities or into startups, investing via a venture fund, investing via PE funds, or investing directly in the public markets via, you know, either a mutual fund or directly. Everything has its own weighted rewards. You as an investor need to define how and what works for you. And essentially with that, you will be able to take more informed decisions. The good part about our business is like the speculation in the stock market where somebody will tell you, ki, you know, ye stock acha lag raha hai, Monday ko aap le lena. In our world, you can't do that. Getting into a company, getting out of the company takes a little while. It's not as liquid. So you cannot speculate so much. You may speculate on the outcome of how a company will do. Like I'm looking at a few AI companies where people say that if this works out well, this will be $1 billion investment. It may happen, it may not happen. That's a speculation. But there is no mark-to-market speculation in our industry the way it happens in the equity markets because of the lack of liquidity. So that is giving you overall just a glimpse around how the ecosystem is panned out. I'm going to skip this entire section, which is investing during the COVID times, because COVID, everyone sat home, technology adoption as a curve just went up astronomically because you had the access to internet and you had no other way of using it. So there were some outsized returns. Historically, whether it is venture capital, whether it is equity market participation, whatever you do, always buy into companies or into stock when the fear is the highest and sell when there is absolute euphoria. Like if I had large reserves of gold and silver today, I would start selling a little bit. I would not go to buy gold and silver at these rates. Even if I don't catch the top, that's fine, but at least book some profits there. In the same way, COVID was a great time to invest because you had some very interesting businesses available at lower valuations. People didn't know where the world is going to go, when are we going to open up. And because you were able to take some of those outsized bets at that time, you've been able to play out some very interesting mark-to-market returns for yourself. Overall, when you're navigating the VC ecosystem, particularly as a fund manager, this is what our daily life looks like. We do deal sourcing, we do deal selection and closures based on what we think they are. Then we try and see what is the portfolio value creation that we can do, and finally figure out how do we get an exit. A few slides around how we source, how we close a transaction. This is the art of negotiating a transaction with an entrepreneur. You see, beauty lies in the eyes of the beholder. I may think that a company is valued at X, and a person who's building it may think it's valued at 10X. Can we meet midway at say 2-3X and say, okay, this is the transaction that we can now pursue? So a lot of our time goes towards negotiating and making sure that we're getting a good transaction in. The risk-reward ratio is favorable. Then once there, can we add more portfolio value addition? Can we use our connects to help our businesses go from that 0 to 1? Besides capital, can we bring in more to the table? That is what we do. And then, of course, exit realization is a natural progression of how the business gets built out. This is a cheat sheet I've made for you in case you're ever looking at investing in a venture capital fund. You're looking at these three main things, which is the team, skill, reputation of the people who are managing that fund. What is their investment strategy and funding capability? And lastly, what is their track record, and how will they give you superior returns versus anybody else? And various, I've sort of broken it down in terms of how you're going to try and look at it. Lastly, since I have like 3-4 minutes left, lastly, I'd like to conclude with what we do at ITI Growth, because I think that will also be giving you some more context in terms of what our practice is like. We run a lean team. We hire smart people. We have a very interesting team, which is IIT, IIM. We have Beena, who's 65 years old, so brings in absolute old world thinking, and married to new age businesses. So very lean team. What we've done and built out. So we essentially, our partners in the fund is the ITI Group, which is run by Mr. Sudhir Walia, who was the co-founder of Sun Pharma. So that is the genesis of where our primary capital came from. And then, of course, we've gone out and raised money from outside investors also. We run a very tech-enabled VC operation where every transaction is fed into a proprietary Notion CRM that we've built out. This is how our investment process looks like. To make about 20 investments, we've analyzed 4,500 companies. We've done detailed deep dives on all of them. Each company is filled in this dashboard, like you can see here. So that's the kind of work and hard work that goes into building a good VC practice. This is how we invest across the life cycle of our fund. We take some very bold bets early on. We take some less risky bets later on at Series A, Series B stage. These are the in-house reports. Last quarter, we did 58 in-house reports. In today's day and age, you have to be constantly at it. You have to constantly keep sharpening your skills. And that is what we've tried to do as an organization. And that's how our vintage looks like. This is how Fund 1's performance was. I spoke to you about Bolt. Some of you would have seen, if you're from the interior parts of Odisha, you would have heard of a company called Red Wing Labs. We are one of the largest drone companies deployed in the state of Odisha, where we take medicines, vaccines via drones as a mechanism to the rural hinterland of Odisha. Unfortunately, your state has been a little less kind to us on the bureaucracy. It's been difficult to get money out for our transactions, but hopefully we'll change that. So there is enough opportunity that can be done across various things, right? As a portfolio, we've done, God's been kind, so we've done relatively okay. And yeah, so that is a quick glimpse on what we do. My last slide has suddenly disappeared. Can you open my last slide? The one after this. Iske baad wala. Okay. I normally end my slide with a good quote. Now my quote, there it is. Okay. The function of economic forecasting is to make astrology look respectable, right? So none of us can forecast exactly with complete granular details on how things are going to pan out. But let's try and at least dream. Let's try and at least look at a future where we are all together building something. Not necessarily it has to be VC focused or XYZ. The idea is, I urge you that your biggest takeaway from today should be to go home, spend 10 minutes a day just dreaming into where you are, where your city is, where your country is, where your state is. It'll change the way, we have a few foreign investors in our fund, and they ask me, how do you define India? I tell them always this: we are a country of 1 billion people who are hopeful and ambitious for everything better. We look for a better future, we look for a better road, we look for a better house, we look for everything better. And when 1 billion people together are trying to upgrade themselves for a better life, for a better something, automatically the country does well, right? So Viksit Bharat will happen when all of us cumulatively are just asking for better, right? So when you're talking to the organizers of this event, right, tell them that next year I come, I want better chai, I want better biscuits, I want better food, right? Everything that you see, just try to upgrade it. And then automatically everything starts falling into place. So with that, I'd like to end myself. Thank you so much everyone for being a patient audience. Thanks.